Questions from GT99. Sounds like a really dope Mustang. There have been a few questions about credit risk investment ideas. Can you walk through how you would screen for individual companies that are at a high risk of default? What screening tool would you use? What would you look for, etc.? Thanks. So Genron, if you don't mind pulling up that website I sent over to you. This is one again that I've used. It's called FinViz. Actually, Trendwizzo turned me onto this. Shout out to Trendwizzo. What a great contributing member to Hedgeye Nation. So FinViz, this is the screener tool. There's got a home screen. Go take a look at this. This is a great way of kind of just paring down some, just screening stocks, right? So screening public companies. Different ways of doing it. You can do it via the exchange, market cap, index, dividend yield, et cetera, et cetera. So if you just click on financials, you'll be able to kind of review fundamentals, technical analysis. Anyway, so there's different ways. Again, I'm kind of doing this on the fly, guys, so apologies. But there's different ways of if you kind of go through there of trying to screen for, different companies that meet your criteria. So in terms of the question itself, what would sort of some factors be? It's your kind of traditional ones that we've been talking a lot in terms of where we've been short, right? So that would be a lot of debt, so high debt, leverage. So high debt and leverage is the same thing. So high debt, slim margins. You've got, but really from the credit default slot, you're going to really do high debt, poor balance sheets, revenues that are, have the potential of declining. So again, we talked about this on the notebook review, that there's sort of two different deltas that you can be paying attention to in regards to both the management estimate or management guidance delta, as well as the consensus estimate deltas. So you can look for screen some of those, right, where estimates may be high or management's kind of guidance is above market consensus. And again, this is a great way of kind of using ETF Pro, for instance, in terms of some of the ETFs and sectors that we have on the short side, like XRT for retail, XLK for tech, consumer discretionary, and XLY. We recently added cloud computing to the ETF Pro product. We've got some commodities in there. The Russell, right? IWM. I believe Coach, I've been a little busy, but I believe he hit the button on Russell earlier today. So you can use those kind of screened by market cap, by kind of, balance sheet weakness. Anybody that's got, again, we've talked about this a couple of different times as well, in terms of anybody that has credit that's due this year in 2023, they're going to be negotiating that as well. So again, you're going to have to do a little bit of due diligence inside of those companies' 10Ks or even their proxy statements. You can access that from the SEC website. And actually that might not, you just Google it, the 10K or the proxy. But yeah, those are kind of some key areas. Again, this is kind of on the fly, so I'll put a little bit more thought into kind of exactly what you'd screen for, but I think it'd give you a decent kind of jumping off point. But we've also talked about this a lot on Weekly Notebook reviews over the last month or two, so you can go take a look, listen to those as well.